All right, and we're live. Tanner's not here with us, but he just checked in behind the scenes. He just said hi, but he couldn't join. Roy, how are you?
Doing pretty good, even though Tanner is late and he won't be here right now. But no, he's occupied, but he'll be here for SoFi earnings, which is coming up on Monday. But yeah, it's been a good week. And whoa, what you got there? I got the peach vibe. What do you got? Tropical vibe. Okay, yeah. So we're vibing, but we're not on quite the same vibe right now.
Yeah. Um, yeah, we had people here. I wanted Tanner to just come in and say hi, but he's on vacation, so we'll give him a break. I also sent this link out to Steve. I don't know if he's going to join. I told him just do 2 minutes for the fans, but I'm not holding my breath, guys. I don't know if Steve's going to make an appearance. I hope he does. Um,
You guys might be stuck with us tonight, and if so, I apologize on behalf of Tevis. So no, it'll be good. We actually we have a bit to talk about it. This is one of those times where they intentionally the C-suite has to go very quiet, and so there are a few things that we'll talk about, but it's the calm before the storm, which is going to be Monday. Although there are certainly things to talk about. What do you want to start off with, Tevis?
yeah, I think I mean we're going to be reporting on the earnings. We're going to do it before the market opens. Going to do the live stream. Some pretty interesting ranges of predictions came in this week. I mean, I did mine, Tanner did his, Chris Hager, others that I've been seeing have their own predictions. Uh, just really interesting just to see the variance in terms of the EPS, especially. I think that's like the main number that a lot of people are looking at. I saw Noto. Did you see this post? Uh,
Yeah, the 2 cents. Yeah, show that, throw that up. That
let
was
me
great.
let me see if I can get that up. Noto's 2 cents post. I also just made a little clickbaity video earlier today around the 2 cents post because it just makes for good content, man. I don't know. I can't pass up opportunities like that. So let me throw let me throw this up.
Yeah, and then it would be actually really funny if it does come in at 2 cents. My own, we did our some of our earning predictions last week. So yeah, there you go. What do you guys think? Is this
Yeah.
reading between the lines or is this EPS?
So this is from Ken Megan. He circled this, and yeah, look, I mentioned in my video earlier today that I don't think this is anything. Obviously, I mean, Elon sort of started this trend. At least that's the first person I saw it, where with regards to the stock splits, like there was hidden signals around the stock split that when he posted and when they actually split, people found that out retroactively, and now people look for hidden Easter eggs in these posts. And I mean, for Anthony Noto, I don't think he's the type to do it. Although I mentioned in my video that if they do, just even if it is by coincidence, coming at 2 cents EPS, now everybody's going to be combing all of his future tweets with a fine tooth comb, you know?
Yeah, I kind of hope for his sake that it's not 2 cents, just because that can, well, it becomes interesting when people are like, is this a hidden signal? And 99.9% of the time it's not. So
Yes.
this is probably one of those where it's not. If it ends up being 2 cents, I still think it's just a happy coincidence. Um, but yeah, we'll see soon.
Yeah. Yeah. The Whisper is now 3 cents. I don't know if you saw that. I mean, there's a huge variance between the Whisper and the actual analyst expectations out there that have 0 cents.
Yeah. I actually one of the changes, one of the things that came out early in the week, I think it was Monday, was Chris Hagar, data driven investing came out. And no, after I read his piece, I guess 2.5 cents EPS. I'm going to stick with that because I said it. I'm feeling a little bit less optimistic for the 2.5 cents. I think that we could see two, though. Two is a good chance. Three is tough. And the thing is, if it's 2.5 cents, they always round up. So it would show as 3 cents. That would be immense. That would be huge. I don't think we get that. So I'm probably wrong on that one, guys. But I mean, the stock can do anything. We're seeing it after hours. It's kind of. Did you see where we ended up after hours, Tevis?
Last I left it was above 8, but I was watching the basketball games. I wasn't watching the. Let me check it out.
Yeah. So
So yeah, 8.11, 3%.
abnormal. But usually SoFi, gets this pre-market run up. Thanks, Mr. Noto. Hopefully our check is in the mail. No. But usually SoFi gets this pre-market run up that's, days or weeks in advance. And we didn't really get that this time. I mean, it's maybe slightly up, but nothing like before. So I don't know if this is making up for lost time or what, but it's
Mhm.
not abnormal to see this climbing into earnings. Is just usually not just like this. And so anything can happen, Monday morning. It's kind of meaningless, but it's fun. I don't mind seeing it up and seeing the portfolio go up, but this doesn't necessarily mean it's going to be a beat or that the stock's going to go to 10 or 20 or 50 or whatever. So just kind of enjoy, chill over the weekend, and yeah, we'll see.
Well, so this is what I mentioned last SoFi Weekly when we did the predictions around the price, and I said it's going to be heavily dependent on what it closes at because we had another full week of trading, and we know that SoFi runs a little bit into earnings. And for the last 3 quarters or maybe 4 quarters now, we have a history of popping on earnings, having a 10 to 20% move on the actual earnings day. And so now that trend is going to become predictable. People are going to try to game it. And so obviously the stock is going to run. And that's why we're seeing a 3% after hours move after a 10% upwards move in the week. And so if the implied move is 15% on earnings, well, all of a sudden you just close at $8. It would be perfectly feasible for you to open, 950,
Yeah.
right?
Depending on earnings, of course, but no, that's what I'm seeing a lot of too. Is people that have taken short-term positions in SoFi, and that'll just be selling on the open. So I think, I mean, it's almost a self-fulfilling prophecy, and I know at some point SoFi will break the earnings pattern. Hopefully not to the downside, but I think the most likely that it's going to do is probably another triple beat. Stock will pump up some, and then it'll get sold off, and we'll see how quick that happens. But there's a lot of people that I'm telling you that are like, "Hey, as soon as it opens, I'm selling," and that's usually not the best time to sell those. But I mean, if you're up, big and you want to take those gains, that's understandable. So
I think the name of the game is we need to hold a new level, man. Like we
yeah,
absolutely need to if we want to just build a base for a stronger sustained move upwards into the double digits, we need to hold. And that's going to be sort of going against that trend of people selling into the earnings day or into the earnings week. Um, we don't want to reinforce that psychology even more to, make it more of a self-fulfilling prophecy. So I think it's really going to depend, right? Because if you have Wall Street that has 6 cents for the entirety of the year as their EPS expectation, if SoFi comes in at, let's say 2 cents for the first quarter, and then they're going to raise guidance for the future quarters, then that's going to lead to a whole bunch of analyst raises as well. Anthony Noto is going to run the whole gambit of, Yahoo, CNBC, Bloomberg, all the stations promoting the earnings. So I do think there's going to be positivity going into it. So we'll see what happens from a reaction perspective. It really depends on how big that beat is and really what they say going forward. I think the bank earnings as well that we saw over the past week or so are going to be somewhat telling, just because so much of their guidance is macro dependent.
yeah, and I think that's really the way that SoFi gets to that next level. Is, of course, outperformance, which it's been doing,
Mhm.
and you may need some macro help. It's a stock that is a lot more rate sensitive than the actual company. The company, high rates, low rates, it's fine as long as the economy's doing okay. I know GDP was lowered a bit, but it still seems like things are decent. Consumer spending is up a lot. And there's some good economic data out there too, but including the manufacturing data. So, but no, I think that most likely we're not going to get to the next level maybe on earnings day, but as those upgrades come in, if they do outperform like we expect, that can lead to that higher floor, especially as the macro, as people realize like, hey, this company actually is profitable. I know that some people are like, no, it's hemorrhaging money, it's burning cash. It's like, I don't know. I don't know what to tell those folks. I know some people just look at it on a 1-year basis, but it doesn't make sense to me. So yeah, the more that they prove that to the market as well, especially if certain segments like the tech platform outperforms, or if there's some more news on that bank in the pipeline, those are all things that we can build a base from and continue to go up. So myself, I do have like a couple of short term, just a little speculation. It's very small, guys. So it's like under $200. It's like Tevis's DraftKings stuff. He bets on sports. I bet on stocks. So, but most of my positions long, and I'm not looking to exit at 9, 10, $11. Is like, no, I know that the stock may sell off, but I will keep holding as long as the company is performing, and I expect it'll perform well. Even if we come out in at like a cent, that's still an outperformance over what they guided for. That's still an outperformance over analyst expectations. Significant one, by the way. So we'll see.
Yeah, I see people also commenting here on the on the price action. We need to hold 10, get past the SPAC
I
price.
would love that.
Even hold 8. I agree. I think we need
Yes.
to hold 10 just to form that new base. There's been very few occasions that we've been in the double digits over the past 12 months, and we absolutely need to, right? If the company is going to be sustainably profitable going forward and guiding far in advance of what the market has expected for it, then there's no reason that the stock shouldn't be following that trajectory. It's been decoupled for far too long, leading many to associate it with being a broken stock, and that can only go on for so long, right? Eventually, it has to come back to the fundamentals.
Dude.
Man.
Well, I personally wouldn't mind though. I've got some net new funds. Likely, I'll see if I end up landing this job early next week. But net new funds coming in, if so, from my old place of work that I can pull over, and if so, that'll take about a month, month and a half. If SoFi wants to chill for another month, month and a half, I will probably double my position. I'll probably buy some anyway, no matter what. But no, but I'm with you guys. Like, it would be great if it goes up 8, 9, $10. I think we're undervalued even at $10, honestly, for what this company is doing, how they're performing, and what their future holds. But the market sees it differently, so we'll have to see.
Yeah, and I think like, all right, I forgot what I was going to say. I was going to ask something. Oh yeah, I will let you guys know that if we do hit 10, I will probably be selling some of my 2025 leaps just because that is getting like I'll be above water on a lot of those. And so I might be selling those, putting them into stock or whatever. So if you do see a clickbait video coming up in the next week, you've been warned. If you see I sold SoFi with my face that looks like this,
that's the algorithm. You have to do that, otherwise you get buried there. So that's understandable. And full disclosure, like I'll do the same. I have stock. I have 2025 leaps that are at 5.5 and 7, I believe. And then I have a bunch of 2026s for January for $10. So pretty conservative on the leaps, I think. Time will tell. But I won't sell these, I don't think, yet, unless we get like an insane pop. Like if we go to $18, like I'm taking profits. I don't see that. Like that would be, I mean, there's a high short interest still. We need to talk about that. But anything could happen. But I highly, highly doubt that. But I will look to basically take that same amount that is a SoFi in my portfolio and continue to have that be in SoFi. So just like you, if we go up, to a certain threshold, I'll be comfortable buying stocks. I don't mind buying SoFi at $11, $12, $13. I prefer buying it at 7, but that means that those leaps printed well, and I've got stock, and I can just hold that diamond hand.
So, okay, I want to get to Mando's comment because I think it's an interesting thing that we can have a discussion around. But you mentioned something interesting around the short interest. But before we do that, just wanted to confirm with everybody, we are doing the live call on Monday. It's going to be on this channel. I think I'm going to be going live probably 15 minutes before the call starts. The results come out 30 minutes before the call starts. So whenever the call starts, if the call starts at 8, they'll be going live 7:45 or 7:30. You're going to have I'm going to schedule it this weekend, so you're going to see it appearing live. But Monday morning, we will be live streaming the earnings call, doing a little bit of pre and a little bit of post thoughts after the call as well. So make sure you tune in for that. Now, in terms of the short interest, Roy, I think that was interesting, right? We saw short interest peak above 20%. It fell back down to 17%. We don't really have any live short interest data right now. What do we think, in terms of the short interest? Has it gone down? Has it gone up? Is it fairly stagnant? Any gut thoughts there?
I would guess that there has been some covering. The main reason is as the market had deteriorated a bit because of macro, and I think that there was time for a pullback anyway. SoFi kind of held its ground, and especially when you were looking at its fintech peers, a lot of those like Robinhood, PayPal to a lesser extent, Affirm certainly, Block, those sold off hard. Even Nubank, it was hit pretty good. Four is getting killed. So. When you see something like that, it can mean nothing, but oftentimes it means like, hey, the bleeding's already done. And people that are shorting the stock, there are some dumb people on both sides of any trade, but for the most part, these are large funds that kind of know what they're doing. Like they make mistakes; they're not perfect. So don't think that high short interest means that things are gloom and doom. But I think that they read something like that and they're like, okay, there's some relative strength here in SoFi. There's some fundamental strength as well. And then there's earnings command, which is always a wild card. They know how earnings works. Like they're not idiots. They can look and just be like, hey, you always get a pump and then you get the dump. And so if I was short selling, and I don't short sell at all, and I especially would never short sell SoFi, but if I was, I would do it this way. I would cover, I would wait for that earnings pump. I would then short the stock at $9, $10, whatever it gets to, and look for that sell off. No matter what the earnings is, it's just almost a self fulfilling prophecy. And
Don't say that, man. Come on. There's 300 people here. Don't say that. Like, you got to say, guys, you got to be invested in this for the long term. There's more juice in the squeeze in the long term. Don't freaking try to trade in and out of the stock. I know that it's tempting because it's made that similar move in the past, but you don't want to reinforce that psychology to say, oh, I'm going to short the stock, at a certain price. It's just, it's not conducive to long term. Like it'll only prolong that period of time until the stock price action and the company performance are coupled again in terms of being correlated. Because right now they're completely separate.
So Tevis, I was talking about the evil hedge fund shorty people, to go back.
Okay, not you personally.
No. There's a huge danger, a significant danger in that. Let me tell you that piece too, just so people aren't like,
so
hey.
let me just read this so that I can bring it down. 18% apparently short interest as of April 15th, which was a couple of weeks ago. I think we're going to get the new short interest numbers this upcoming week, maybe for short interest, but 18% is still really high. I think still fairly fairly volatile from a liquidity perspective. Sorry, go ahead, Roy.
So from the other standpoint, the danger of trading in and out of this, if you want this to be a long-term position, or if you're an evil hedge fund listening and you're listening to me for financial advice, probably don't do that because you're going to lose a lot of money. But if you did, the danger is we let's say that SoFi outperforms, it does well. Maybe there's a little bit of sell-off, but not as much as expected. And then all those upgrades come in, upgrade after upgrade, interview after interview. Macro continues to do well, S&P 500 and NASDAQ to a new all-time high. And people look at SoFi. The thing is, if we were trading SoFi at like $18, well, yeah, like it's probably going to come down. Would be a little bit overvalued at that point. We're talking about $7. Like if it goes up to $9, it's undervalued. If it goes up to $11, it's still undervalued. Like if it went up to $40, different story. So we're talking about a fundamentally sound company that is making money, that is making sound decisions, that has a history of outperforming, that has high short interest. And so the danger is it starts coming down a little bit, and funds start buying in, retail starts buying in, Noto is pumping the stock, everything kind of goes all together. And those shorts begin to realize, like, hey, we screwed up. We got to get out of this thing. And that causes that gamma ramp, that causes a gamma squeeze, it causes a short squeeze. I'm not talking about like an AMC or GameStop thing, but this stock realistically could pump. I don't expect this. I don't think this, but that 18 thing that I threw out is like, that's reasonable given the short interest in a perfect scenario. It's not likely to happen, but it can. And that needs to be taken in mind. If you're trading the stock in and out, just be comfortable knowing like, hey, at some point you may miss a boat. And if you're good with that, that's fine. There's many stocks out there. And for the shorts on the other side, like, you got to be careful. Like, this is not a company that's going out of business that's way, way overvalued. There's many of those out there. I don't understand why they'd short SoFi.
Look, either way, there's going to be heavy volatility, and it might just be, the fact that I don't want it to fall for me to say, don't short it. Like, it could definitely fall. And then we could see a more steady accumulation of a new base over the next several weeks and months following the earnings. Like, if we chilled in the 7 range and this earnings, it pops to 10 and it falls back down to like 859, and we can chill in that range for a little while and eventually stair step our way into the double digits. I'm not sure what's going to happen, but what we know for sure is that there's always volatility on earnings day. And I think history, like, there's a clear pattern of that happening.
Yeah, and how I personally feel, like, we've talked about the NBA partnership and the advertising that they're doing. We'll see how this quarter plays out, but I think this will be a good quarter. I think quarter 2 might be an absolutely great quarter. A little bit too early to tell, but there's a lot of indications of that. And if so, like, and we'll see how they raise guidance. If they raise guidance more aggressively than we even expect, they're still the same company that guides very conservatively. I will get very, very excited at that point and kind of see it as a not. I'll always be able to DCA and SoFi, it's fine, but I'll see it as like the last opportunity to really like load up heavily. So I'll definitely do that.
Wait, the FOMC meeting goes on Wednesday as well. That's obviously going to have effect on SoFi. Like, well, yeah, right. Because if the entire market takes a pullback, then that's going to mute any type of positive effect that SoFi might have.
Okay, but realistically, the markets are only pricing in one for the entire year. Like, I don't see a scenario with the election, with what the United States government is needing to do as far as paying off their debt, where there's not even a single cut. There may just be one. So, like, the worst that's going to happen, yeah, it might go down like temporarily and then go back up. But like, what are they going to say? Like, hey guys, one rate cut is like, we already know, we price it in. I think actually that the market has priced in more to the downside than's actually there. I think today might have been part of that correction. Is that the pullback is over? A lot of that bearishness was there. You have to feel like let the bears have that false hope, set that bear trap, right before you rip their faces off. So that's what's happened.
Dude, I just want to say that this chat is absolutely like bananas in terms of, I can't keep a straight face with a chat like this. It's just, I don't know, man. These people are, it's an entertaining place. Let's put it that way.
I enjoy this community. I love you guys.
So I don't know if the bank numbers are going to come out tonight or this weekend, or if they're going to not come out before earnings at all. In previous quarters, we've had the bank numbers come out slightly before earnings, or sometimes after earnings as well. Joe Biden for president wants a wrench now. Sorry, that threw me off. I haven't seen them. If somebody in the chat has seen the bank numbers, then let us know and we can throw them up on screen for everybody. But to my knowledge, they're not out yet.
Okay. Yeah, at least when I looked earlier, I haven't had a lot of time this evening. They weren't out. So,
all right, let me throw up this comment from Mando. Mando, thank you for the $5 for fun. What one consumer product would you love to see released tomorrow? One B2B product. So if SoFi were to announce a product tomorrow, Roy, what would you want it to be?
Well, if it's B2B, just simple business accounts, I think it's a good start. And you start there, and then you can start adding to that flywheel. So it doesn't have to be anything necessarily fancy. Um, in consumer product, um, I don't know. I mean, like, obviously, it would be good if they finally finish up the Zell stuff and they get level one options. So I don't even think that's asking very much, but
Mhm.
that's what I always like focus on. Like, is this the time where are they actually going to do that? There's a lot that they can do, but it's kind of an interesting point with SoFi where they're being a little bit cautious, more cautious, supposedly, with lending. So we'll have to see. Like that limits them if they want to be very, very careful with lending, what they'll actually go into. So, um, yeah, I don't know that they'll launch anything or mention anything there, but well, they tend to surprise us. Do you? What do you think, Tevis?
Who cares about product? We want higher stock
That's
price.
how you get higher stock price sustainably.
um, yeah, look, I think business, I think is the clearest path that they can go into. Um, that's like the only clear B2B new channel that they can expand into, as opposed to these like feature specific products like options, Zell. These are features in my mind, whereas business accounts is like a completely new channel, right? It's a completely new line. Um, I mean, tax season is over, but a tax product is what I would have wanted for SoFi. We know that they might be working on that in the background. Noto commented on a previous post, I think by Chris Hager, saying that, basically in so many words that it's coming soon. But other than that, I could see some nice Galileo products. I mean, if we're talking B2B and we consider a good Galileo partnership, that could also work. A SoFi at Work. We've been seeing a lot of cool SoFi at Work products being released or sorry, not products, partnerships. Like we saw the Chipotle one. We know that SoFi at Work works with 6 out of the 7, Magnificent Seven companies, and uh, we saw the NAR partnership. We saw a bunch of partnerships in Q1 actually, and I think that SoFi at Work, the product where they basically, if you pay off your student loans, they put an equivalent amount in your IRA. I think that's a pretty good perk that a lot of companies will start offering to their people. So,
Yeah, that's a huge need. Student loans, student loan debt. That's something that's always been on mindset, and also helps SoFi's reputation too. Like a lot of people look at the lenders and refinancers as like they're pests. They're the ticks of the world, and that's not the case. Just it's a product. They make an offer. If it helps somebody, great. If it doesn't, I mean, it's ultimately your choice. You're in debt anyway. So, SoFi solid gold card. No, please do not copy Robinhood. Let Robinhood hopefully succeed. But we talked about that before. And like, if Robinhood breaks even on that and they get more people in the ecosystem, that's good enough. That's going to be very hard for most people to do. I don't know that Robinhood could do that. So only time will tell. SoFi's had enough. That's one thing that I'm actually very interested in is some of the larger lenders have seen a little bit more charge offs this quarter, but a lot of them actually have seen improvement, which is very unexpected. So we'll see if SoFi continues to improve there. Hopefully,
yeah, I mean, I put this in my sort of earnings predictions video. With regards to the credit card segment in general, the biggest sort of red flag from that perspective is the fact that, if I have my numbers correct, last quarter they had about 15.5% what's it like defaults essentially, and that number is steadily coming down. I
yeah,
expect it to be 14% or under for this time around, because as they issue more and there's more scrutinous on the requirements, and obviously as a whole the percentage is just going to fall, right? Like that just logically makes sense. um, and eventually that credit card segment, I mean, they're putting 100 million actively investing in the credit card segment as well as SoFi Money, and so those are the segments that they're not going to be profitable. They're going to bring financial services down from a profitability perspective, but
for
it's
now.
only a matter of time before they flip to the positive and they start contributing to the financial services segment profit.
Yeah. Yeah, and with business accounts, one thing is to keep in mind they have a partnership right now to sell business loans. I think it's going to be a long time before SoFi actually starts selling or issuing their own business loans. It just they have to be a little bit more cautious there with where they've guided. They're not as capital constrained as before, but as those business accounts move over, once hypothetically they actually start that, that'll give them some more room, some more overhead that they can go off of. So, um, but yeah, that's the main one. I know that if they announce business accounts of any type, it might be enough to bring Steve back. Honestly, like that dude is excited about the business accounts, and justifiably so.
Well, it makes sense. I mean, they need it eventually over time to be competitive in the market and just to grab more market share. Like it's there for the taking, and so there's only so much growth that they can have if they don't have the business accounts, right? So as they expand, they need it.
Hmm.
Steve isn't coming back. I mean, it's a possibility. I don't. I'm not holding my breath. I know that his job is fairly demanding, so but we wish him. I mean, he has the link right now in his inbox, so um, he could pop in at any minute. You don't know. Let's see. Steve left to get milk. He went out for cigarettes, never came back.
Come back.
um, so, do we want to jump into this redeemable Series One preferred stock? This was, I think, the biggest piece of news this week. We can stop at any point to just answer stuff from the audience, and whatever you guys want us to talk about, we can do that. But I have this post here, and this was actually a post by Vadim. Let me see if I can actually pull it up. And I found this fairly interesting. But basically, SoFi this week announced they released an 8K on Wednesday, and they announced their plan to redeem all outstanding shares for their Series One. Hold on, let me throw this up on screen for their Series One redeemable preferred stock on May 29th, and this is about 340 million. And what this is going to do, they were paying dividends on these, and so they're going to be saving about 29 million in dividend payments for the year. We knew this was going to happen. They're using the money that they raised in the 2029 convertible notes to pay these off. And the reason why we knew this was going to happen is because they basically said last month when they raised the 2029 notes that they were going to redeem all of these outstanding shares because of that interest rate or that dividend. So the funny part about this is that these preferred shares are $105 per share, and they paid a 12.5% annual dividend, and that was going to rise. That was going to increase in May of 2024. Anthony Noto held about 6,000 of these shares. Silver Lake and QIA held the vast majority of those shares. And so SoFi basically is paying 340 million to deprecate these, so as to save that payment going forward. Now, Vadim made an interesting post, and let me see if I can throw it up. So he made an interesting post here on these preferred shares that I think some people might not be aware of. This is on Reddit. And he basically says, everyone knows that SoFi is redeeming these shares. The interest was 12.5%. Can you see it okay?
Yeah.
Here, maybe that's better. The interest was 12.5% due to increase in May. This results in SoFi paying 630,000 to Noto, paying 23 million to Silver Lake, and then paying 315 million to the Qatar Investment Authority. What you might not be aware of is that the QIA and Silver Lake have a seat on SoFi's board, which would expire if they have lower than 5% of the outstanding shares at that time. Silver Lake has 31 million shares, so it's not really a risk. However, the Qatar Investment Authority has about 3 million shares. And so losing those shares would lose them a board seat. Now, they have outstanding warrants, and the warrants are expected to expire in May 2024. So there's about 12.1 million warrants. These would convert at a 1-to-1 ratio. And this would be dilutive, right? Because SoFi would issue shares for these warrants at the end of May for these three parties. So 22,000 for Noto, 858,000 for Silver Lake, and 11.2 million for the QIA. So essentially, this is assume all of these are converted, then these guys get all of the 11.2 million shares of SoFi, and they retain their board seat by the end of May. However, the interesting thing is that the warrants that are expected to be converted, they expire on May 19th, and so they need to convert until then, which is again dilutive, but they have a strike price or a conversion price of $8.60 something cents, I believe, $8.86. So basically, if SoFi hits $8.86 by May 19th, then it's assumed that these guys are going to convert these warrants into shares to maintain their board seat.
So we're rooting against that then.
I don't think
necessarily.
we're necessarily rooting against them, but it's likely going to be a dilutive event as those warrants are converted.
I don't like that.
It's
It
not
is good.
It's not going to be massive, right? If you think about 12.1 million shares compared to what 976 million shares, it's like 1.5%, something like that.
Yeah, and it's I don't know, like it's a large float stock, so it's not the end of the world. It's like the senior convertible note offer where they end up saving money over the long term because of the nature of those dividend yields at 12.5%, and like, man, where can I get me some of those? But no, it seems like it's a sound thing. They need to do that, and I guess if worst case scenario, it gives us a little bit of a silver lining. Let's say that they don't convert on whatever pop might happen with earnings, and we stay below that amount. Then that would mean it's non-dilutive, or they end up just buying the shares if they want to retain that board seat. So, of course, the higher it goes, the more beneficial those shares actually are for them. But we'll see.
Mm-hmm. Yeah, I think the last thing that any SoFi shareholder wants to see at this point is even more dilution in the stock. I think that left somewhat of a bitter taste in investors' minds in the short term over the 2029 convertible note offering. Of course, the reason why is because if you have this again, it's all short-term thinking, right? So if you have this stock price that hasn't done too much in the short term and it's been stagnant, and there's all these opportunity costs out there in this market that I could have been in Nvidia, or I could have been in whatever else that ran, and I'm in SoFi, and then Palantir, sure, and then on top of that, the management dilutes even further. Like, I understand why you'd be pissed. Now, the other side of that argument is to say that, well, SoFi is making these moves so that they can have a better financial position from a cash flow perspective over the long term. So over the long term, of course, they were going to deprecate a lot of these, these options and the preferred shares and the debt, all of the stuff that they had as a private company. They're now closing off those, loose threads, and that's going to help them over the long term. It's going to help them from an EPS perspective. It's going to help them just become like their balance sheet health in general. So short-term pain for long-term gain is the thesis there. But the reason why a lot of people are more scrutinous about it is because of what the stock price is doing in the short term. I don't necessarily agree with that. I'm just saying that that's the amplifying factor.
Yeah, B-dubs hit the nail on the head there. Key is that they aren't diluting to fund operations.
Yeah.
That's some people took that for some reason as a conclusion with the senior convertible notes. It's like, no, this is a profitable company. It'll continue to be profitable going forward.
Mhm.
This is just to shore up and take care of some of those private matters so that they're stronger in the future. And between the savings from what would have happened if they didn't do the senior convertible note offer, and also this, that's substantial to the bottom line. It really is, and it helps them be able to be flexible to do more things to grow their business more aggressively. It's a right decision. Short term, it's not fun, and anything can happen to the stock price in the short term. But yeah, solid company.
Mhm. Uh, Anything else we want to chat through? Any questions from the audience? I know we're sort of understaffed today, so lots more
Yeah,
airtime.
let me share this just for fun. Got this in the mail, ironically, and my wife told me, she's like, I wouldn't even know what this was if you hadn't been talking to me about SoFi this last year. And of course, she recognized it right away. She's not on the bank account yet that we're in the process of creating. Oh, you can see my wife's uh, first name there. Okay, doesn't go by that, so it doesn't matter. I didn't realize that until now. But yeah, we got one of these in the mail, and I found it interesting because the comments. So many people mention, and maybe you guys can. Yeah, you're saying that you got that too. Um, if they are not trying to grow lending much this year. They're actually looking at 90 to 95%. Why are they doing things like this? So, and there's a few different possibilities. And this is no guarantee of a loan, and I don't think that they would approve us for $100,000, especially my wife who doesn't have an income
So
outside of me.
what
So
it's a little bit tough to see. What am I looking at? So it's a pre-qualification for a SoFi personal loan, right?
yeah, of up to a request any amount of up to $100,000, 8.99% APR. That's with all discounts, or it can be up to about 30%, 29.99%. It's approved in as little as 1 day. You can consolidate credit card debt. You can do whatever. It's a personal loan.
Got it.
So for whatever reason, they sent this to us. So we are looking at switching credit cards. So maybe that's why, I don't know. But
But
no,
this is not a credit card though. This is a
no,
personal
no.
loan.
This is a personal loan. It's still lending.
Yeah, I mean that's 8.9% is or I guess 9% APR. It's not nothing.
No,
Uh,
that's a good rate.
is it?
Yeah, it's well. So this is though that with the asterisk, like unless we actually pursue this, I don't know if this is like if you have like perfect credit and you have like a net worth of $10 million, then this is so most realistically, we'd be in the double digits for sure. But no, this is a pretty aggressive rate and aggressive advertising. A lot of people mentioned
Hmm.
they're getting this, so I'm just kind of curious: is this an indication? People have actually said at the beginning of this for months and months that they are looking to grow that loan book more aggressively than they had said. What do you think?
Look, man, I've always been bullish on the personal loan segment for this year. I didn't believe for a second that it was going to be down. I mean, look, we're going to see what it's. I think Q1 is going to be telling for the future quarters for the entirety of the lending segment. But I just think in the environment that we're in, I don't think personal loans is going to be falling that drastically. Like, I wouldn't be surprised if it is actually up. Um, so I wouldn't be surprised if the entirety of the lending segment is up. I think uh, the thing that I've reiterated multiple times is I think we're going to end the year with lending up single digits as opposed to being down single digits.
Yeah, and I don't know. Anything can happen in quarter one. It could be, and I know Tanner had said this that he thinks they're going to be a little more conservative in quarter one and maybe be a little more aggressive in the later part of the year. We'll see. I don't think that's the case. I think that they're still looking to expand that book, and they have more room to do that just because of the senior convertible note. Again, deals like what happened as far as what we talked about just earlier with the preferred stock and with the senior convertible note, those don't happen like where Noto wakes up one day and says, "Hey guys, let's do this today."
Right.
That's not how businesses work. This is months, usually in advance, that they know that they're going to do this. or have a high likelihood of doing that, and then they execute on it. So, and one, of course, led to the other. So this gives them a little bit more room, especially if deposits are growing the way that I think that they might be. That gives them a lot more space to be able to grow that book. So we'll see soon enough. But
I found this comment interesting as well. Any word on how much the NBA and the golf partnerships cost? I mean, look, NBA was announced in Q1. I'm not sure if we're going to get any insight on the cost around those partnerships of what that's going to be from a marketing perspective for SoFi. Would Q1 feasibly be the time when they talk about that, or maybe not?
I don't know. That might be in the SEC filings, and it just under a certain umbrella, like marketing expense. I don't know that we'll get those details. We did get that with SoFi Stadium,
Yeah,
and the closest we got on this was with Jason Tatum. It said that they were distributing $1 million towards his fund. I expect that he probably gets something as well from SoFi that we don't know.
absolutely.
But no, these deals don't come cheap. So, it's a little bit less when you have, if they sponsor this podcast, which they won't, and I don't think that they could, because that wouldn't be very appropriate. But if they did, hey, great. Or Celsius, if you guys did, that's awesome.
I'd have to be way more politically correct if they were going to sponsor this podcast. I would have like a certain amount of F-bombs I could drop every session. But just for the people watching, a little treat for pre-earnings. Welcome to the stage.
What's up?
All right. Esteban, how you doing?
Where the heck have you been, man? What basement have you been held hostage in?
And listen, I can't help it if Amit calls me and it's live when I'm driving or I just get home. I don't know his schedule.
What's been going on, man? How's life?
Busy.
Busy?
Busy. You guys ready for Monday?
Yeah. Okay. So Steve, tell us where you're at. What are your predictions? Because these guys have heard all about our predictions. Tell us about yours. Let's go.
I don't know where I am on the predictions. I think it's more like I said it before. I think that I want to hear a lot about the tech platform, and I want to hear a lot about what deals they've had, and I want to hear what progress they're making, because that's always been the bull thesis about the multiple. You need to have, why are all these?
Because they love you. Keep going.
So that's always been the bull thesis about the hybrid multiple. And that's how we get there, or even a tech multiple, is truly showing that SoFi is not just a bank and that they are the underlying vertically integrated technology platform that's going to run a portion of the financial institutions going forward. I think you're going to have good member numbers. I would like to think we're going to be profitable. I would like to think that we're going to have good guidance. And, this is a big quarter because it's going to show that the team wasn't getting overly bullish on the numbers of the predictions. And I think that this is a formidable quarter, and the next one's going to be a pretty big one too, because it's going to establish a roadmap to the ongoing profitability. And I think we need to hear about customers on the integrated platform between Galileo and Technesis. I'm less focused on, and while member growth is still very important, I'm less focused on that right now, because without the tech platform, SoFi is more like Ally Bank at that point.
So do you think that, because one of the theses that I've been talking about is that this is around the time
Where's Tanner? He's late.
He's in Jamaica, so he's going to not be here.
He's late.
Yeah, he is. Do you think, Steve, that we might get a POC validated or reflecting in the Galileo numbers?
I'd love that. I mean, look, we know that there's an undisclosed regional bank that's on the platform. We don't know which one. I have my suspicion that it's Truist, because when you go through the Truist Q4 presentation, it shows a significant bump on digital transactions and just the whole digital aspect. So that makes me think that it could be them. I have no idea. I'd like to hear about more RFP stages and proof of concept. And I'd love if we could hear that a deal is closed with a large financial institution. I know there is speculation that maybe Citibank, maybe UBS was that large financial institution they were talking about. And
Or
I
both.
I believe that Citibank had some type of relationship with Galileo in the past, maybe, or Technisys, one of those. So it would be nice to get some clarity around those. I mean, that's what's going to change everybody's mind and not look at this as just a bank.
Would you rather have information on that or have them announce business accounts?
Oh, that's a good one. Because business accounts is big. It's very big. They're all important and they need to do all of it. Okay, so from a business aspect, I think business accounts is more important for the short term, but I think that the tech platform is equally as important or maybe arguably more important for the long term. But business accounts is very important because now you start talking about, okay, if they get business accounts, now you can segue into being their custodial for 401ks and 403bs and that type of stuff. And you can truly start talking about assets under management from an investment bank platform. So, look, there's a lot of different verticals that this company can go in. It's going to take a couple of years for everything to mature.
Yeah, fair.
Steve, can you answer this question?
I don't have my glasses on. You're going to have to read it to me.
Steve, are you able to come back to SoFi Weekly? Elaborate.
No, can't do it.
That's as elaborate as it's going to be. So Steve, so you don't have a member prediction or you don't have an EPS number of what you're going to come in at?
No, I mean, doesn't matter.
No.
Just like, does it really, at this point in the game, does it really matter? I think it's more important that we get good information about what we're doing to grow the business, not necessarily how many members we're adding. Look, as long as we're adding 5, 6, 700,000 members, yeah, everybody wants 800. I want 800,000 members. I want 1 million members a quarter.
Mm-hmm.
I don't know if that's the most important thing at the moment. I think we need different verticals to generate revenue and earnings. And I think that happens from business accounts. I think that happens from growing the banking side. Look at what Robinhood's doing with freaking IRAs.
Yeah.
Like, we need a full-blown asset management arm, especially if we start getting into business banking, because you can offer them a full suite of products.
What do you think?
Including business lending too. I mean, you can become arguably a business development corporation with an asset management arm and banking arm together.
So since we have you just for a brief bit of time, SoFi earnings Monday pre-market, PayPal earnings Tuesday pre-market. What do you think about PayPal? Not?
No.
Do you think they'll be good?
I don't care if they're good or not. Am I still a shareholder? Yes. Have I lost all faith in the CEO? Yet to be determined. I mean, look, the last earnings call was very rough for me. I did not like what he said. I'm still in it. I'm still going to be in it at least for a couple more quarters, unless I get so deterred this quarter that I'm just like, you know what, whatever.
What I love with both of these companies, very, very different and very, very different stages of growth, is that except for retail, SoFi has very low expectations going in from their own guidance. The analysts are not even expecting a cent for EPS. And then for PayPal, even from the company themselves, which, you and I were upset about that, rightfully so, I think. But also from analysts, there's very little expected. And usually, and also from retail on that one too, usually that's a good setup for a significant outperformance. I hope that we see that. Throw this up on the screen real quick, Tevis, please.
Well, I would like Alex Chris to act like an adult this quarter.
It'll be good.
And not say that we don't provide value to our freaking customers. Like, come on. Can we get a new publicist, please?
The best thing I think that happened this last quarter was Jamie Miller, her clarification on the Wolf FinTech forum. I forget what they exactly call it. She is a very capable CFO, and she can be there to kind of hold Alex Chris's hand a little bit. They have the board as well, but just to help guide him and be like, hey, maybe don't say that next time as a CEO.
Her comments weren't any better on the conference call.
Not on the conference call, but she'd been there like 2 weeks. and she was just trying to support her CEO on the fintech forum. That's the reason why PayPal hit that bottom and began inverting. I think that the earnings call itself will be good. The results will be good. I think
Look,
you'll be a happy shareholder. But I know one company
I
you're a
hope
happy
so, because
shareholder.
I truly believe PayPal is massively undervalued, and I think it's a great company, and I think it's got great potential. It's just I don't know what PR school this guy came out of, but he was not prepped correctly for the earnings call by any means. I mean, it was crazy.
Yeah, the school of Intuit. So I know one company you're glad you're a shareholder of right now
I
is
can't wait for
Robinhood.
Palantir earnings. I can't wait for
Oh
Palantir
man,
earnings. Oh wait,
yes.
Robinhood. I'm
Yeah,
sorry.
no, Palantir too, like absolutely. These ones are a little bit further out, so not this week. But Robinhood, you mentioned the assets under custody growth. This
It's
is in
huge.
April so far.
Yeah, it's
April is not
huge.
even over. Like when you do this sort of thing, and then of course they have the Robinhood Gold Card coming out. They have, I think, 1 million people. And we'll see how that actually plays out. But it'll absolutely grow their ecosystem.
And I'm going to tell you, I hate what I'm about to say,
Go ahead.
but there are a couple of people that have been saying it, and I'm starting to think that they're correct. Should Robinhood and SoFi just merge? I
Yes,
mean, and
I've
have
been saying
Noto
it.
and have Noto run the whole thing. I mean,
It'll never happen, dude.
I know it'll never happen, but I mean, it's just like if the two of
Synergistically, it
them,
makes sense, but it just because here's the problem.
it's a jump start to so many things, and they
If
both benefit together.
Yeah, but if you ignore everything else, if you ignore the market caps and everything else, Vlad will never give up that CEO position.
Oh, I get that. I'm not saying it would happen, but I'm just saying, think about what it would be like if the two of them merged and SoFi was the CEO.
It's an impossible dream, but that would be like
Impossible dream. But Robinhood has what SoFi needs, and SoFi has what Robinhood needs.
that would be the JP Morgan Chase of fintechs.
Yeah, I mean,
I agree.
I think this is a good comment. Hood would need to lose crypto.
Good. Lose crypto. Who cares?
Dude, crypto is like the main thing that's driving their business right now from a transactional perspective.
Crypto wouldn't matter.
Over the long term, sure, but
Wouldn't
right
matter.
now it's for Hood.
Wouldn't matter, because now you add all those assets under management through the IRAs and everything, and you jumpstart an asset management business through SoFi. It would just be it would be great.
So with Robinhood, I'm curious, have you built out that position at all, or are you just sitting on the shares?
No, it moved away too much, and I don't
Yeah.
necessarily believe in it long term the way that other people do.
Yeah.
Look, a lot of people love the app, and I don't get it. I mean, I have a very, very, very small Robinhood account that I could burn in and wouldn't mean anything. And I tried using it the other day, and I was not impressed. I don't know. I don't see what the fuss is, but I'm just one person with an opinion.
Steve, B-Dubs is asking, any new positions since we've last spoken?
Tesla.
Yes, let's talk about it. Or is
Super Bowl. I am Super Bowl on Tesla.
Roy, are we talking about it here or in after hours?
That's your call, brother. This is your channel, or we can give Steve the option if you got 15 minutes or 20 minutes.
Yeah, whatever you want to do. I can talk about Tesla. I mean, look, it was everything to make somebody like me, who said on record in an article the title Tesla's overvalued by 85%, and then Tesla goes down by like 68 or 72%, and I was almost 100% correct, and I was a super bear saying it's just an auto company, and I've put out 2 articles now completely retracting it, saying they are not just an auto company anymore, and I believe in their future. And I went as far as saying there's a chance they could be the largest company in the market in the next decade.
All right. They want to hear about it here, so we'll give it to them.
On the condition we can sneak in either after hours if Steve has time, or here a little bit of Palantir earnings, because my man, I got to talk to you about that.
Yeah, sure. So
I'm down to do Palantir earnings.
We can do Tesla first.
So think about Tesla. So what I always said was, I don't remember the exact numbers. It was something like 95, 96% of their revenue was from automobiles, or 92%, and 100% of their gross profit was from automobiles.
Mhm.
and energy and services was not generating anything in gross profit. Those businesses over the past couple of quarters have helped diversify, and they are now generating, I think it's 81% of gross profit is now from automobiles in Q1, if I remember correctly. So they are diversifying away. But Elon has built a company that's sitting on 26 billion in cash, and they have 3 billion in debt. They have roughly 22.5 billion net cash position. They
Mhm.
just ramped up CapEx, and they don't have to tap the debt markets to do it. And forget how Tesla got here. They have an underlying car business that's going to fund every other business. And the car business is going to act like a Trojan horse. They've been able to roll out a supercharger network that has 6,500 stations or whatever it is, and something like 57,000 superchargers. And then when you add on the convenience ones at hotels, it's in the 90,000 range. You had Ford and GM and some of the other larger OEMs announced that they are going to utilize Tesla's plug. So now from a supercharging infrastructure, they're going to generate incremental revenue, not just from Teslas, but from other EVs. Now you have the aspect of full self-driving. You're going to have a big report over the summer. You may have a cyber cab this year. And he flat out said that they are in talks with one large automaker on licensing FSD.
Right.
I would speculate that that's Ford, not GM, because Ford's CEO seems to like Elon and like Tesla. So I
Right.
would think that there would be a synergy there.
It's 100% Ford. I'm like,
When
Yeah.
they do eventually get to full self-driving level 5 autonomy or whatever it is, you're going to need regulation to catch up and everything. So I don't think that robotaxi and full self-driving is a thing for 2026. But to say it's not going to happen by 2030, I think is kind of a stretch. I think it'll be here. And when you think about the monetary investment that needs to happen, the amount of compute that needs to happen, and the level of engineering, I don't think there's going to be another company that can beat Tesla. I think they're so far out in front on this that they'll end up licensing the technology to the other auto manufacturers, and they'll be the brains behind all their cars. You're going to generate a huge amount of incremental revenue when you look at how many cars Volkswagen sells and Ford sells and GM sells. So if from 2030 to 2040, they're grabbing all of those on a per unit basis, and then you start talking about, well, at that point, ride hailing and robo taxis, Uber and Lyft better figure something out, because now you're going to democratize the whole thing, because you have no more human labor capital that you need to put into that price. So they're going to be able to come in and completely undercut the market. And I would think that Uber's done at that point, because Uber's not going to be able to compete from a price perspective, because Tesla can just come in and freaking, they already build the car for next to nothing. Their cost on the cars, they don't have to make any money. They can open up their whole unit and make the money from ride hailing, charge 50% less than what Uber charges. And they can charge at their own stations. Then you have Optimus, which could be bigger than the entire car business, I think.
Yeah, on FSD, before we go to Optimus, because I mean that is the ultimate bull thesis. Did you guys see the full self-driving news regarding Europe today?
No.
Elon Musk. So we drive here, on the left-hand side in the States, and so the models, the FSD was not ready for right hand. Up until this point, Musk announced, he said, I think it's ready. That was 8 hours ago. And there are screenshots from Sweden, from Germany, and a couple other countries as well, where people are using FSD 12 in Europe. That's significant. That's huge news. And it only paints this picture, I think, more completely, that full self-driving, I think 2 months ago, I was like, it's going to take some time. They've made strides.
And think about this. The amount of money that they've spent in these H1000 chips or whatever they're called from NVIDIA, the amount of compute that they have, nobody else can match them at this point in this space. The data subset that they have, I mean, all the, what is it? Something like they have 3 million cars collecting the data now. I think that they are so far ahead that they are going to be the company and their software is going to be the software. Because I don't know that you can actually have multiple softwares. The way that I look at it is you would need everything on the same network. Maybe you don't, but it would probably be safer if everything was on the same network. But I just think that they're so far ahead right now and they're not going to slow down. I think their power of compute is going to be unmatched and they're going to license it out. I think that is huge. And then Optimus, like really think about this for a sec. I heard a number today, and I'm not going to say where, but I heard a number today that the Optimus bot is roughly costing them around $10,000, $10,500 to build. And
a reputable source?
All right, so I'll say it was on the All In podcast. So I think it's halfway reputable considering the person that says it is actually friends with Elon and knows
Jason?
a lot about the business. And Elon has said in the past that the bot is going to cost about $22,000. Now, when you think about engineering precision, this is going to be something that the first market adopter will win the majority because there's multiple sides of this. There's manufacturing, there's warehousing, but there's also residential. And then there's businesses that are going to buy robots to create businesses. But here's the biggest thing. For people like us, anybody who's a residential client, so I've said this before. If the bot can do my laundry, if it can clean, and then if you have a house, if it can cut the grass, and if it can clean your pool, and you can pay 22 grand for it and finance it over 5 years and have a $300 a month payment or $350 a month payment, there's a halfway decent chance you're going to buy it to buy back your time and your family's time from remedial chores.
Yeah, but like, so
hold on.
Go ahead.
When you buy it, you're not going to go buy another company's bot 2 years later. Like this is a one and done until it breaks. So you need a new version. It's like a car. Like you're locked in.
Do you think it'll be like iPhones where you just like buy new versions or
mostly? No, I think that they're going to have a service fee. And I think that the robots will be hooked up to a neural network. And every task that gets completed from me picking up this water bottle to folding something, I think every task that gets done, every robot hooked up to the network will learn from every task that's done. And it'll learn so quickly about everything that everything will just be perfect when it does it. Because you'll have bots all over the place sending information back and continuously learning. And they'll generate incremental revenue from a $30 a month service package, which will hook it up to the network and everything. And this is something where the amount of bots that can be put into society greatly exceeds the amount of cars in society. Because you think about the amount of business, think about this, you're going to have businesses started where somebody buys 10 bots and then starts a cleaning company and cleans offices with bots. You're going to have people that start businesses with bots from lawn care to everything else for people that don't necessarily want to buy bots. And then what about buying bots and renting them out to people? Like this is going to create a whole infrastructure that I don't think people are really grasping. And you have people like me who are going to buy one. Like I'm 100% buying one when it can do what I need it to do.
1,000% buying one.
There's no question about it. Like we're not talking about something that's going to cost 100 grand here. We're talking about something that is basically like buying a lower end car that could theoretically be a $300 or $350 a month payment that can buy back your time.
Yeah. The crazy thing is, like, I would rather buy a bot than buy a car. Like, just in my specific situation, living in a metropolitan city, like, I'd rather buy a bot and take an Uber everywhere than buy a car. Like, it has more utility to me in that sense. Go ahead.
Yeah, no, we would go to one car in a heartbeat and just make it work if it meant like we could afford one of these where we couldn't before. Because, I mean, time is that.
I mean, Roy, think about that. You have a family. If you had a bot that could do all the loads of laundry for your family, it could cut your grass, it could potentially cook, it could do your laundry. I mean, it could clean.
You love the laundry use case.
No, but think about, I don't think people understand, even if you're a single person, you're doing a couple of loads a week.
Sure.
Okay. If you have a family of 4, you have to be doing 5 to 10 loads a week.
Sure.
So when you think about actually doing the laundry and then folding it, how much time is that? Like, that's my biggest thing. I think it's going to become more normal than not.
Oh yeah, and the thing is, they have a beyond a first mover advantage, which there will be competition, of course, because it's a huge space. There has to be.
And this is where
But
I disagree, Roy, because nobody can match Tesla's manufacturing expertise. There is going to be competition in the military industrial complex space because that's not the area that Tesla's going to go after. You'll have General Dynamics and stuff like that go after that.
well,
But you look at
there
a
will
company
be.
like Figure Eight, yeah, their bot looks cool. But my question is, okay, can you compete with Tesla's manufacturing?
Yeah, that's.
I don't think that there's any company that's going to be able to, because Elon tomorrow could take the land next to it and build a bot factory and implement a manufacturing process. And I don't think anybody can do it better than him. And I
So
think that the odds are that he will be, or Tesla will be, the number one first to market for this
For
at
sure.
mass scale.
Yeah, and I think that they'll be like the iPhone, where they
Yeah.
own the market. But
I agree.
there will be some competition in a few vectors. One is there's people that will continue, as irrational as it is, that hate Elon, and they will not trust an Elon bot. That's what they'll call it. They'll just say no, absolutely not. And there will be some that'll be niche. There will be some that want a kind of bot that Tesla probably is like, hey, we're not going to make you a sex bot. Like that's just we're not doing that. But and those sort of niche sort of things. No, and beyond that, I think that they have a huge advantage as well. The only place possibly where they could see competition, and I think there will be regulation against this, is from outside, like from China. But the thing is, I don't think the United States is going to sit by, especially with this TikTok ban, and say, yeah, it's okay if a huge amount of our workforce are Chinese bots that are collecting data on American companies and at any point could capitulate. That's dangerous.
Yeah, I don't think that they'll allow bots from other countries in people's homes because it's just too much of a safety risk from a hacking standpoint and whatnot. I just don't think it's going to happen. And there is going to be competition, but I don't think at a mass scale, competition is going to be able to compete with Tesla from a manufacturing standpoint. I just don't see it because when you look at what they've done with the car manufacturing process, they've completely overhauled it. They've gotten better at manufacturing than all the other auto manufacturers. What happens when they do that with the bot? And don't forget, on the conference call, they said that they're going to have the bot doing a lot of tasks in the factory by the end of the year, and they may be in a position to even start selling it by the end of next year. That doesn't mean it's going to happen, but are we going to bet against somebody who is sending rockets to Mars and putting satellites up in space and completely disrupted the auto industry? Are we not going to take him seriously?
And somebody who has a massive reputation for missing timelines.
Yeah.
I'm not saying he's not going to miss timelines. That's a risk. That's a huge potential risk. But my investment thesis is 5 to 10 years. It's not 1 to 2 years.
Yeah.
So here's one timeline so there's a couple of timelines given out. The most exciting, obviously, is the bots. Yeah. I think realistically, they might be used just because they're there and they want to say that they're able to do this. Even if they didn't make a whole lot of sense, like within the manufacturing line, just doing some sweeping the floor or whatever. It's like, whatever. But the one timeline that I do believe, so do you guys know, let me put it this way, the only timeline that Elon Musk was accurate on for Tesla, what product? That beat, actually, is a Model Y. And the reason why is a lot of the Model Y was designed around the Model 3, and it's on the same general manufacturing line. The Model 2, they announced that it is going to be a real thing, robotaxis, all of that, is going to be on the same manufacturing line. There is a little bit of different process. They're using the unboxed, and there's, I'm sure, things that are going to be different. We'll learn more on 8.8. Maybe it'll take a little bit longer than that as well. But when they've rolled out these timelines, and they're talking about the Model 2 coming out 2025, like that, I think is realistic, just because it's on the same manufacturing line. It's very similar in that way to the Model Y versus the Model 3. They've done it before. And so that's when I actually believe, I think the market is discounting that just because it's always like, oh, Elon Musk timelines. Be skeptical on the full self-driving a bit. Be very skeptical and optimist. But on Model 2, I believe it. I buy it fully.
So in full self-driving, it's out of their hands in terms of when that level 5 approval comes in. Like it just is. They have an estimate around how many billions of miles with FSD need to be driven before they can have enough confidence of moving forward. But it's not really in Tesla's hands. With the bot, I do think that the commercial applications far out surpass the sort of normal person applications.
I
Like
agree, especially when you look at a global scale.
right? Like
Yeah.
I would love a bot to, cook and do my laundry and run my errands, and that's great. But they can just sign one contract with, Amazon and replace 40,000 workers across all of these distribution warehouse facilities, and all of a sudden, like you can just do the math on that, and then multiply that with all these other logistics companies, manufacturing companies, every factory out there. It's just going to be insane without even tapping into the B2C market.
Yeah, I am much more bullish on Optimus than the car business. And when I say the car business, I mean everything about the car business, from FSD to the cars. FSD has a lot of issues because you need regulation, but more importantly, you got to figure out the insurance market. So, does Tesla need to assume all risks now if they are ultimately operating the vehicle? Because if you are saying that the human can go to sleep and it's going to drive you around, I don't see why, from an auto insurance aspect, if the vehicle gets into a crash, that's on the human if they're in the back seat because this is chauffeuring you around. So I think that's something that needs to be figured out. And if Tesla takes on the responsibility, this is something that, you know, depending on how many accidents there are and whatnot, I mean, I don't think anybody is under the realization that it's going to be flawless at any point. Maybe it gets there, who knows? But look, that's definitely a potential risk factor for this whole autonomy thing. Like regulation, is it only allowed in rural areas? Is it allowed in cities? Do cities try to block it to try to save jobs with Yellow Cab and Uber and Lyft? I mean, there's just a lot of unknowns that we're not going to know. The potential is there, but there's too many outside risk factors for me to get super bullish on that as my main bull thesis compared to Optimus. But I think when you put everything together, I mean, I can see a picture where Tesla, if everything goes right, becomes bigger than Apple or Microsoft.
Oh, absolutely. Look, I bought more Tesla this week. It was actually the only stock that I bought this week. Steve, I'm curious to get your thoughts. Is the Tesla bottom in the short term?
It feels like it. I mean,
140
look, I can't predict the future, but it feels like it's in because they had a double miss and they went up
Right.
because Elon acted like an adult, because he gave timelines, whether they get hit or not. He gave everybody the long-term plan and how everything's going to feed into each other. And it right now it feels like it's in. I mean, right now everybody is backstopping it with buying it. So maybe it goes down a little bit. I don't know if we see 140 anytime soon. I mean, I think something's got to deter one of these business lines for it to go back down.
Let me ask you this. What do you think of the vote in June? Is there a possibility that Elon doesn't get that compensation package and then just gets, because you could argue that a lot of the push that he's making in the short term is in anticipation of that vote.
If the vote goes no, and if Elon leaves, I will sell my shares the next day. Because without Elon, there is no Tesla to make.
Yeah.
Right.
Same.
So unfortunately, Elon is Tesla and Tesla is Elon at this point. And if you don't have him there, I'm not saying the other people aren't capable. I think confidence will be lost that all these things can get achieved. And I think FSD will get achieved because they're so far ahead. I don't think
Right.
Optimus will get achieved to the scale that I think it can get achieved. I don't know if energy can get achieved to where it could get achieved. So, yeah, I think that's very risky. And if that vote goes no, I'm out. I don't care. If he leaves, if he doesn't leave, I'm in.
This comment is also telling because when Elon leaves, he's also like there's a good chunk of the talent that's already there. That's just there.
Especially with non-competes going bye-bye.
Yeah, exactly.
Oh, yeah. He'll hire the best for SpaceX. He'll start another company. Like, that's the other danger with Elon leaving, that these people are going to be loyal to him.
Yeah, absolutely. What else, Roy?
Palantir.
Okay. So for Palantir, we're going to go into the after hours, and we're going to borrow some more of Steve's time because we haven't talked to him in a while. And we're going to talk Palantir. How you get there. You have to be subscribed to the channel, and if you are, hit that join button, and you get access to the after hours show. We'll post that every Saturday. But other than that, everybody, thank you for joining us for an extra long SoFi Weekly in anticipation of the earnings on Monday morning. I will see you all on Monday morning on this channel when we're going to be live streaming earnings.
I'll come back next week for earnings.
Yes. Steve, will you be there for the earnings live stream in the morning?
On Friday.
You'll come back on Friday.
I'll come back next Friday for earnings.
There you go, people. You have it here first. See you, everybody. Have a good night.